of Taiwan with a 0.3% cut coming through.
FY22 GDP has been revised higher by some 2 trillion rupees. From 147 to 149 trillion rupees.
Axis Bank completes the acquisition of Citibank's India consumer business.
Risk reward could favor the bulls and may not be very beneficial for the bears, given that the SGX Nifty suggesting a 50-point downtick.
Key reason they've upgraded the stock is because the company has taken a 25% price hike across 50% of its book, including renewals.
That's the first tick on the index. The sensex is up 150 points.
The market's seen a pretty steep correction over the last 7-8 days.
There is nothing so dramatic as that report suggested about, massive cuts.
They've raised their target price to 1,619, which is a big upside to the current market price.
I would not term it a serious slowdown.
It's a big hike that we are seeing in the LPG prices. For the commercial cylinder, that's 19 kgs, it has been increased by 350 rupees per cylinder. The Nifty holding on above the 17,400 mark.
For Capgemini, 2022 was the best year we've had. Almost 22 billion euros in revenue.
For the markets, absolutely steady. Nifty is up 110 points.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel D'Souza and my co-anchors will join me in just a bit. Well, the call earlier this morning was risk reward could favor the bulls and it may not be very beneficial to be short at these levels. Well, that call is perfectly played out. We're at the high point of the day as we start off Closing Bell, and that's not happened in the last 8 sessions at least, because normally we're a little bit wobbly at around 2:30 p.m. odd, but a relief rally was called for, and that's precisely the way it's playing out. The Bank Nifty as well as the IT index, both of them, well, they haven't been going together. But today it seems they're doing a bit of a waltz. Both of them are higher, and that's what's helping the Nifty as well move higher. The broader markets, they've outperformed for the second day running, and I like that. You look at the mid-cap index and the small-cap indices, both of them are up between 1.2 to around 1.3% odd. The portfolios will be feeling much better because, in the last few sessions, the Nifty has been under pressure, and some of those broader market stocks have taken a hard knock. But today, encouraging to see that we are seeing the broader market participation. Let's get straight to the option data. In an uptrending market, well, you want to see some bit of action at around the lower put levels, and that's what's happened. You have the 17,400 put, 17,350 put. There is some writing that we're seeing out there. But just you need to note that the PCR now has moved to around 0.91. At the start of today, it was 0.68. And as we know, one could debate on this, but I've been holding my view that once the PCR dips below that 0.7 and the FI is a net short, well, in the last few months, we have seen that's a perfect combination to see a bit of a short covering bounce. And that's what's played out today as well. What's the important level to track? On a closing basis, you'll at least like to see the Nifty close above the 200 DMA. As of now, we're 50 points, 60 points above that level. But on a closing basis, you want to comfortably close above these levels to give the bulls some hope that maybe, in fact, we could move higher from here. The congestion zone is closer to around the 17,500, 17,450, and we're in that vicinity. So we'll have to keep an eye out whether the bulls have enough ammunition to push us through from here. Well, plenty to discuss in the next 60 minutes or so. But first, let's run you through what we have lined up on the show for you. Auto sales for the month of February have been a mixed bag. We'll get you a roundup of all the numbers. CNBC-TV18 has accessed the Dish TV Minority Investors Association letter to Dish TV board, in which they allege breach in corporate governance. Details coming up on the show. We'll also talk about market and stocks with Ajay Vora of Nuvuma Asset Management. All this and more in the next 60 minutes or so. All right, well, we've been talking about the markets holding about that 17,450 odd. The Nifty Bank continues its relief rally. How do you position yourself, though? Mitesh Thakkar joins us at around 2:30 p.m. Well, Mitesh, it's a better afternoon, right, if you're a bull? The last many sessions, we have always been asking you, Mitesh, what do you think? Where does support come in at? Today, let's flip the question around. Since we're doing well, where does Nifty run into resistance?
So, Nigel, I think we've been saying that 17,450 is the reversal point on the Nifty spot. We're practically there. And once we cross that, I think the Nifty could possibly see a rally to about 17,600, maybe 650 zones, and then we'll take it from there. I also highlighted that the Bank Nifty could be the decisive factor. I think the Bank Nifty had already stopped falling a couple of days back, while the Nifty was still making new lows. And we've seen the Bank Nifty move up nicely as well. And I think getting past 40,400 levels suggests that 4,600 should be captured, which it is done. And now I think we are looking at a test of 41,100. So there is some kind of trading pop definitely in both the indices, and the momentum is on the upside. So trade with long buys. I have 2 buy calls right now. Federal Bank is something which has given a good reversal, good candlestick pattern with volumes today. That's a buy with a stop at 130.5, look for targets of 140 here. And Zydus Life, another stock which is outperforming and then was correcting for the last few days, now has got back into an up move. That's a buy with a stop at 468 for targets of 490.
All right. Okay, Mitesh, thanks a lot for that. We'll keep coming back to you, as the show goes on. But it was getting a little lonely in the studio, and Surbhi has joined us. She does that show on digital, and I hope all you guys are, tracking that. What's moved the market and who has moved the market. So, Surbhi, good to have you back. It's a good session, Surbhi. Looks like the bulls finally, they're breathing a sigh of relief. Relief. It's finally come.
Nigel, I got late because I was rubbing my eyes in disbelief. You don't see this kind of screen anymore, so I got trapped along the way. No, just kidding. But yeah, we were discussing Axis Bank with Abhishek on who moved the market today. And the market has moved in such style, right? I think the best part, Nigel, is what you've also been highlighting, that there were no hiccups along the way today. Yes. It's been very steady. We've not had those jagged edges where suddenly there's a drawdown and then things kind of pick up. So it's just held steady, and that inspires at least some level of confidence. The Chinese markets did very well today. The Hong Kong market, for instance, the data out of China is pretty strong. I was also looking at the final tally for the month of February. FI selling has come down quite a bit. I mean, we saw selling of 29,000 in January. In February, that number is down to about 5,300 odd. So it's a huge sigh of relief. March has begun. We can only hope, the bulls will rather only hope that they get to see at least a few more days like the one we're seeing today.
Surbhi, if a pessimist will still say that, well, the Nifty has still underperformed today. But I'll tell you what, the bulls, they have got battered in the last few days.
They'll take this with both hands.
They're saying 8 sessions on the trot, we are down. At least some green on the screen, 150 points. Well, we'll grab that with both hands. But since it's the start of the month, let's get straight to the auto sales numbers.
Oh, absolutely. And let's find out, of course, what the report card is looking like. Sonia is joining in for that. Sonia, hi. So more hits, more misses, or we're just looking for positive news today. You tell us whether the auto sector is delivering.
So it's been a mixed bag for the auto sector this time around. Now, what looked good is definitely the tractor sales. So both Escorts and M&M reported very good tractor sales. Let me start with that. It was a growth of almost 28% for Escorts. For M&M, it was a growth of almost 26% year on year. And the commentary that Escorts put out was also very strong. They said that the demand trends are positive, and that's something that could continue going forward. Ashok Leyland and M&M auto sales were also looking quite good this time. In fact, on the auto side, M&M saw a growth of 8%, and Ashok Leyland's total sales went up by 27%. So that's the strong lot. But on the weaker side, it was the export piece that continues to be very weak. So let's start with Maruti, where the total sales growth was restricted to low single digits. Less than a 5% growth is what we saw for Maruti, because the exports were under pressure. Exports down about 28% year on year. Followed by which Bajaj Auto, over there as well, total sales were down 11%. Exports are down almost 38% year on year. The management said that there will be a couple of more months before export recovers. They're expecting recovery to come through only July onwards. Tata Motors as well, the total commercial vehicle sales saw just a single-digit growth this time around. In fact, it was a fall of 3% that we saw for the commercial vehicle piece, while the passenger vehicle sales as well saw a decent growth, led largely by the electric vehicle sales. So that was strong, but stripped of that, passenger vehicles not too good. So all in all, you'd have to say it was a mixed bag for the auto sector this time.
Okay, got that, Sonia. Thanks very much for the updates coming through. We have Prakash Diwan joining in. Prakash, good afternoon. Great to have you on the show as always. Actually, the specific auto stock that I want to start with today is Bajaj Auto, because there are the numbers, as Sonia pointed out, and then there's what the management told us, and the management saying that Nigeria troubles should be over by the first quarter. Now, if that were to play out, then is this a story that you like at current prices? What's your call?
Good afternoon, Surbhi. So, there is nothing very flashy about what's likely to happen to Bajaj Auto. Even if exports do pick up, which they could possibly, it is going to be more of a hope trade, because unless they do something in terms of getting slightly ahead as compared to the TVSs and the Heroes of the world on the EV side, it could probably not fetch that kind of a premium valuation that it would otherwise warrant. So my sense is that it's going to be a little bit of a long haul. Domestic sales at the bottom of the pyramid, the kind of bike sales that we are listening to in terms of from channel checks, they're not yet very encouraging. So post monsoon is when everything starts looking up. So you'll probably have a dry summer of sorts for some of these auto players, especially the two-wheelers. Unless, the EV side is kind of compensating for any lackluster performance on the conventional business. But I wouldn't put too much of hopes on exports as yet, because even if they revive, there's going to be a lot of margin issues which you'll have to grapple with. So, yeah, I mean, give or take, it's going to be range bound in this 3,700, 39, 4,000 kind of zones. Nothing very spectacular from.
All right. Hi, Prakash. Good afternoon. Prakash, but what about the CV space? After a while, we're seeing two-wheeler makers doing well. That's Bajaj Auto. You have Maruti as well as doing well. And Ashok Leyland, in fact, is down 1%. I think it's rare at the start of the month you've seen Ashok Leyland under some pressure. What's your view on the CV space? The call this year was the best of CV is ahead. Do you believe so? And how would you play it?
So interestingly, what's happening on the CV side is that the focus that a Tata Motors or an M&M used to have on CVs, if you notice, there's really not much of action and buzz around CV launches or any new variants coming through or any rationalization of the product mix. It's only Ashok Leyland that is now a pure play CV option. And within that, interestingly, the kind of products that have started doing better than the others, the MHCVs and all, are fairly linked to, how the core sector of the economy, for core sectors like mining and all are going to be working. So the moment you see a little bit of a comeback on that, and my guess is it's going to be very soon that you will see the China juggernaut actually having a ripple effect on the demand side on metals. And if metals do well, mining will do well any which ways, right? And we spoke about how NMDC and MOIL and all are getting a bit aggressive in terms of their targets and their capital allocation towards that activity. Ashok Leyland will definitely be a very big beneficiary of that. The other thing is road construction, the way it's going, Nigel, it's crashed travel time, end to end on the logistics side from a lot of, for a lot of players, which means that you have, far better utilization levels if you're a fleet operator. And that's one of the reasons why replacement has not been so active or so vibrant. And that could change once you have far bigger networks and the kind of, GDP numbers reflecting that growth in exports and transport of goods. So I think overall, what takes away the sheen from an Ashok Leyland or the CV sector as a whole is going to be compensated by new vectors that will come in. So net you'll probably still be positive. And Ashok Leyland at these valuations is not something which I would worry about. It's not, you're not overpaying for it. And it's probably the best way to ride the linear growth in CV sales as things look up, as I said, let's say in the next 3 months, if not immediately. So give it 1 quarter, and I think it could come back to that. It'll get its mojo back. I don't see any reason why it should not make newer highs in this year itself.
All right. Thanks for that, Prakash. Well, it's a good time to welcome Prashant as well, who joins us on the show. Hi, Prashant. Earlier this morning, we hinted it's going to be a good day. Yeah. And I told you that at the word go itself. It's likely to be a good day, but after 8 days of selling, I think the selling exhaustion is something that also played a role. But good to see we are getting the GST numbers that are trickling in there and up 12% on a year-on-year basis. So we're holding on to that run rate of 1.5 lakh crore. Yeah. Good to see.
I mean, and that is important, Nigel, after the pretty poor GDP numbers, right? Yeah. I mean, we're talking about macro numbers, and GDP numbers were below what were the consensus expectations, which itself was not very great to start with. But then they were even worse than that. But this is a good day on the screen, and things are looking pretty healthy all over. Market breadth, I mean, you look at the banks, you look at the broader markets, it's pretty good. The GST numbers at the bottom of the screen, 1.49 lakh crores, and that is about 12% higher year on year, as Nigel pointed out. For 12, above 1.4 lakh crores for 12 straight months now. So that's some kind of a record. I mean, obviously it's a record because the taxation regime has not been around for that long. But this is, I think, the longest stretch that we've had at this strong numbers. 160 points, I think, on the Nifty, 17,463 odd is where we are at. I don't know if you asked Prakash, guys, a question on the markets themselves near term. Prakash, are we in for a bit of a short-term reprieve? What's your sense?
Oh, absolutely. I mean, I've been advocating that, Prashant, for almost a week now, given the texture of the market, the weakness that we saw. When we were actually above 1800, everybody was anticipating a breakout. And you remember how we started sliding down all the way to 17,250, 17,300. And that's exactly what markets do. They never oblige with what you expect or what you'd love to see. And right now, the situation is such that we really don't have any great triggers. But if you start anticipating a normal monsoon, you start anticipating that you've reached a level of GDP dip, which probably is going to be the bottom for at least this financial year, and then things could slightly be better here on. There's no reason why a lot of money will not start chasing some great value which is available. And remember, even while Jan and Feb have been very brutal on the markets, there are still a lot of nifty stocks which have made newer highs. If you look at, somebody had shared a very interesting anecdote about 31st December values and 28th February values, and they are higher for 21 of the 50 stocks. It's only the high PE stocks, Prashant, which have actually got a hammer, and that is something which is healthy for the market. You got the froth out of the market, but you still have some great opportunities in cap goods, in infrastructure, maybe even IT at some point in time post-March. So, there's enough that smart money will seek out. The FOMO effect is still not coming naturally because retail participation is dried out completely. And that's exactly why you don't see very interesting stuff. But today's screen also tells you, just to add to what Nigel was saying in the beginning, we are not just up on the Nifty in a linear way, but even the advanced decline ratio is fairly healthy. So it's not just the heavyweights that are moving, but you almost have a 4-to-1 kind of an advanced decline, which is, after a long time, I've seen that. So that means there's some broad-based participation which could start coming in along with the short covering. That's also evident. But yeah, March could probably be not as bad as February is, but don't expect fireworks on the positive side as well. Volatility is here to stay. Just live with that.
Now that is important. Control the enthusiasm. It's one day, right? Slowly. This is slowly.
What is this, Prashant?
Let's celebrate it. It's been a long while.
Nigel and I are just like, okay, finally we have something different to talk about today. You guys are like completely damping our enthusiasm, but I think it's for wise reasons.
Yeah, absolutely.
I mean, the impulse is to celebrate always, right? Always be optimistic, and that's the way to be in markets. I mean, if you want to make money over a longer period of time, but if you're trading, I mean, it's a much more trickier game. It's a much harder game as well, much more harder. As we all know, so you got to kind of take it one step at a time. Today, if we close here, I mean, if we close 150 points higher, we'll be about 60 points above the 200-day moving average. Yesterday was a close below the 200-day. Today we'll close above the 200-day. So that's 1 day violation and then back up. So that's something which is good. I mean, it kind of reaffirms the potential for perhaps a somewhat more of a pullback. But as I said, you just have to give it time. We'll take a quick break here. Our first of the show, we'll come back and we discuss more stocks and markets. Ajay Vora of Nuvama Asset Management will also be with us on the other side. Stay with us.
Welcome back. You're with us on Closing Bell. Before we move on and talk about other important factors in the market, let's address a story that Ritu, broke out just a couple of hours back, and this is in the latest in the Dish TV Yes Bank case. We have accessed Dish TV Minority Investor Association's letter to the Dish TV board, which was also sent to the stock exchanges, to SEBI, as well as to the company's creditors. Ritu Singh has the details. Ritu, there are some allegations here about a lapse in corporate governance.
That's right. Surbhi, the Dish TV Minority Investor Association has actually alleged a breach in corporate governance by Dish TV because they failed to disclose the Ministry of Information and Broadcasting letter, which approved director nominations on its board to the exchanges. So we've accessed this letter that you spoke about, written by the Minority Investor Association, which is addressed to the board of the company, SEBI, stock exchanges, various creditors and stakeholders, in which they've stated that through an RTI that they had filed, they obtained the information that the ministry has approved names of 6 independent directors as early as the 26th of December last year. And since then, Dish TV failed to disclose this permission or letter to stock exchanges and also delayed the appointment of directors which were approved by the ministry and thereby committed a breach in corporate governance. The letter also states that these breaches are especially serious given that Dish TV's directors and officers have also previously been reprimanded and also fined by exchanges and SEBI for multiple violations of corporate governance and listing requirements. Now, the letter is important because this comes ahead of Dish TV's EGM on the 3rd of March, where it is going to seek shareholders' approval to nominate 4 independent directors on its board. And herein lies another issue, because according to our sources in Yes Bank, the names proposed by Dish TV do not include any of the independent director names which were proposed by Yes Bank and also approved by the ministry. Remember, this tussle between Yes Bank and Dish TV, of course, has been ongoing, given that Yes Bank, is a large shareholder with 24% stake. Of course, that has now been transferred to JC Flowers. But as per our sources, of the 4 names that have been proposed by Dish TV, 2 have not even been approved by the Ministry of Information and Broadcasting, and therefore the shareholders, the minority shareholders, have demanded that the company convene a board meeting and approve these directors, which were named by the ministry, and hold the management accountable for not making the adequate disclosures.
Okay. All right, Ritu, thank you very much for getting us those details there. It's an important story there. And Ritu, of course, keeping us on the top of it. The market continues to chug along. It continues to look at gains at a very steady clip, actually. Mid-cap index up about 1.5%. The other aspect is, of course, the advanced decline ratio has shown a fair amount of interest and momentum. Today we've got 2,300 stocks advancing. That hasn't happened in a while as well.
Well, we've been talking about auto sales. We've been talking about, earnings and the likes, and this El Nino effect as well. I'm not sure what's going on with, some of these companies, Rupa, Dollar, Lovable, all of them, they are flying away in today's trading session. Prakash, what's your best guess? All these stocks, they are moving up on big volumes. I'm not sure whether it's the El Nino effect.
El
is
Nina,
going to be,
right? It's Nina. Bad summer, scorching summer is Nina.
Yeah, maybe I have to change more. I don't know. Prakash, you tell us, what's your sense on these stocks? What's driving them up?
I wish I knew, but usually it's always good, even if you are a disbeliever of sorts, in the fact that the underwear index is something which tells you how things are looking up again. You could probably be staring at a situation where things start working up in terms of consumption. But then, the other thing is, these companies have actually morphed themselves into more of branded wear companies rather than utility, basic staple utility stuff. And we are talking about businesses which have been fairly volatile in terms of the cycles that they undergo. So I don't like this sector as a whole. But what you could look at is consumption as a whole is probably, Nigel, very interestingly undergoing a change in trajectory from the drying out at the bottom of the pyramid to more of the mass affluent product segments doing well. And from that perspective, we've spoken about that. Mangalam did a very interesting piece on how premium stuff is doing much better than the mass stuff. But there are certain companies which straddle both these segments. So, for case in point is ITC or a Nestle, and that is where I think the market is ignoring that. So when there is money that comes back through the ETF route and FIs start looking at us more sanguinely in terms of allocations, you could probably see FMCG make a very quick, swift comeback, probably post-April or May, and that coincides with the monsoon, benefits also, post-monsoon benefits. So look at that consumption from that angle, but no specific pick from any of the 3 names that you mentioned.
All right. Prakash, thank you very much. Good speaking with you as always. These stocks have been beaten down no end, right? I think Rupa, the high was about $600. Even after today's rebound, it's at about 240. You look at dollar industry, something very similar. Complete collapse in some of these names. The high was about 650. Stocks after today's 13% rebound is 350. The other one is Donier, not exactly in the innerwear segment, I think, but that is also seeing a 15-16% move. The high was 120 or so, and after today's rebound, the stock's at about 90 on Donier. So that's the other one. By the way, I was just noticing, market breadth is good, but just looking at, just pull these names up, right? And so this is the broader market, the big volume-led gainers list. So Lux Industries is another one, by the way, in the innerwear segment. Look at the Adani stocks are all doing well. Dish TV, Ritu just spoke about. I'm going from down to up, all the way up to the biggest volume-led gainer. Dish TV will come up on your screen. Everest Kanto, I don't know how many people remember that, EKC. Garden Reach Shipbuilders should come up 5.5%. Minda Corp is coming up with about a 7% gain. There is JK Lakshmi, which is up 6. Hindustan Copper, which is up 6. Polymed, Nalco, APL Apollo. There is Uflex for the second day running. Uflex, again, one of those completely bombed out names, saw a big 10% move yesterday, another 10% today. And there is Rain Industries as well. Triveni Turbines is another one, but Triveni, of course, is at new all-time highs, and that continues to surge. Yesterday 10, and again today 10% as well. So this is the big volume-led part of the market. So it's, I'm not saying it's a list which perhaps is wanting of better quality names, but I would have liked to see more, some of the more well-owned, more institutional kind of names in this big volume-led gainers in the broader market, which perhaps would have given a little bit more in terms of confidence. But not to complain, we've got an up day. That is what matters. Ajay Vora is with us, Head of Equities at Novama Asset Management. Ajay, great to have you with us here. Thank you very much for your time. You know, I want to start by putting out a chart which you've sent over to us, just to establish the chart and ask you to kind of talk about it. So let's just put this up. What Ajay wants to talk about is the MSCI emerging market chart, which is the sort of pink line on the screen, and the green one is the US 10-year Treasury yield. And I think the graphic is pretty self-explanatory. Whenever the 10-year spikes, emerging market, the MSCI emerging market benchmark sells off. This is all the way from March 2022. It's exactly inversely related with the US 10-year. And as you can see, with the 10-year rising, the MSCI emerging market has been plunging. Ajay, so the chart is established, it's on the screen. What do we make of what the market wants to do from here? Will we have to kind of foretell what the US 10-year is going to do to kind of decipher what the market here will do? That's tough. But what's your sense?
Yeah, so thanks a lot, Prashant, for having me on the show. So the only reason, why this chart is extremely important is, personally, I feel that it's very clear that, our markets are likely to stay in this range for some more time. And I think that's what we discussed last time as well. 2-3 months back, there was a consensus view globally as well that the interest rates have maybe peaked and therefore the inflation will come off, and therefore, the market should start rallying. But over last, 1 or 2 months, that view has been negated because of the overall core CPI data as well as the strong employment data in US. And therefore, we have seen this 10-year rising again from 3.3 levels to 4% now. So the point is that, whenever you have this kind of an environment where it is established that the interest rates are likely to stay higher, it is unlikely that most of the markets would have a valuation expansion. And the same applies to our markets as well. Because if you look at, how we have been in this range for almost now 18 months, actually. So October 21, we hit a high of 18,500. And we are in March 23, so we are still 5% lower from those levels. So the best part is that we haven't collapsed as such, broadly because of the domestic flows and also no major earnings downgrade. But, post-festive season, which is like from November 22 onwards, we have been seeing a reasonable slowdown on the discretionary side. And I think market is taking its own time to see where this slowdown extends and settles down, and therefore the magnitude of the earnings downgrade. So my sense is that globally, higher interest rates and locally, till we see this overall slowdown settling in, we will stay in this range, except for the technical factors. There cannot be a significant reason for markets to rally sharply. And why I say technical, because as you rightly mentioned just a few minutes back, that we have been taking support somewhere around 200 DMA at around 17,350. And if you look at the positioning as well, the FI positioning again is at all-time high of around 13,000 crore short, around 130,000 contracts. So that needs some adjustment, so which is taking place, and we are taking a decent support from there. But broadly, I think the range is here to stay for some more time.
Ajay, we're making very, very valid points. We have earnings, a bit of an earnings hurdle that we have seen in the past quarter as well. Earnings weren't really up to expectations, but there is risk on the downside. And then you have this El Nino that's, that's suddenly come to fore as well. So let's see how this goes. But, you know, sometimes these markets, when they're a little bit jittery, they give you good buying opportunities. So let me ask you about the banking space. You have been fairly positive out there. That's seen the hardest knock. Last couple of days, it's bounced back quite well. What would you buy from the banking pack? Would it be the private sector banks, the large ones, or some of these PSU banks as well, still offering great value?
So, Nigel, on banking, I strongly feel that there is nothing wrong with the banking sector with us right now. And we are going through a similar phase what we saw in Jan to June last year. At that time also, we were looking at fairly strong numbers going forward. But because of the FI selling, the sector was underperforming big time. And I think over last 2-3 months, again, it is the same reason. And we all saw the strong numbers in Q3, which most of the private banks reported significant margin expansion, a healthy credit growth, benign asset quality. So fundamentals are very much in place. It's only that, this is what FI owns in a big quantity. And therefore, their selling will continue to put some pressure. Let me just give you, one important data. You'll be surprised that, say, suppose, Nifty CAGR over last 5 years has been around 11-12%. And Bank Nifty CAGR over last 5 years has been 10%. So within the large cap private banks, except for ICICI and SBI, all other private sector banks, the 5-year CAGR has been less than 12%. So you can imagine the fundamentals have improved significantly over last 5 years for all these banks. But actually, if you look at the market performance, it has been quite subpar and very ordinary. So my sense is that, we have gone through this period of around $60 billion of outflow in 2 years from FIs, 36 billion last year and 24 billion this year, which has led to a sharp, I would say, a significant overhang on the banking stocks. Once we clear this, maybe a couple of quarters from now, because of maybe, whenever the Fed changes their stance or whenever the selling abates, we'll see a decent performance from all these banks. So therefore, we continue to stay bullish on the banks.
Okay, so bullish on the banks. Ajay, let me not ask you about a sector now, but let me ask you about a theme. I've been just remembering a conversation I had today earlier with a company that's about to list, Dev Talk, the new IPO that's opening out. My question is very simple. I mean, A, would you look to play this Go Green theme? And if yes, then through what kind of companies? I mean, on the auto side, we remember what's happening to this company Electra, right? Last couple of days with their hydrogen buses, and now you have this new entrant, and Degvi told us they want to be pretty big in the EV space when it comes to transmission systems. So if you're looking to play the theme of Go Green, then what part of the cycle or what part of things would you really target?
So, Survi, actually, if you remember, we all have seen this movie n number of times over last so many years. Whenever a particular IPO theme is coming up with, or, many larger companies are getting listed in a new space, people do get excited. But the point is that, although the opportunity size may be very big, but the gestation period and the profitability both will take a lot of time. So we have always maintained an approach over last 2-3 years, including all the newly listed companies as well, that it is important that the valuation has to be in line with what the earnings are. And considering the EV or the green, the theme what you're talking about, actually if you look at it, the profitability and the cash flow are fairly low versus the valuation these guys are commanding. So we would continue to...
So, no, Ajay, I didn't mean it only in terms of a fresh IPO thematic play. I meant in general. I mean, you could look at a Tata Motors as well. You could look at a capital goods company for that matter, or maybe a Reliance. I mean, if you think the existing listed players are a better bet.
Yeah, agree. So the point is that, we are excited about the businesses which are already established and trying to participate in a much bigger theme. So we are positive on the entire cap goods space. And just to give you an example, we all saw how the tendering has taken place from the railways. The size of the tenders, the opportunity and the growth visibility which these kind of tender gives you is something what excites us. So we are pretty much positive on this whole cap goods infra space. And although, the valuations may look very unreasonable right now, But that is the whole opportunity and theme. If India wants to move from say $3.5 trillion economy to say $7, $8, $10 trillion, these are actually the companies which will end up benefiting from significant order inflows. And as we move forward, investors will get a lot of confidence on their execution capabilities as well. So it's a long gestation period, but at least there is certainty of execution, profitability, cash flows, and valuations may be high, but that can stay high because the growth is pretty much, very high. So that is a theme where we are reasonably positive.
All right. Ajay, it's a pleasure and a good conversation as always here on CNBC-TV18. I hope to speak with you soon again. Thanks indeed. That's Ajay of Nuvama Asset Management with thoughts on the market. Now let's bring in Nimesh, who is joining in for D Street Chatter. Nimesh, of course, has been working the phones, getting us a sense of what's happening, what kind of flows are we seeing. It's up day, Nimesh. I think that's the first thing to kind of take note of. But what are you picking up?
Hi, Prashant. So a strong day for the markets, and actually it's built up on the early morning gain. So there has been it's like a trend day, so to speak, for the markets on the upside, and the breadth is positive. That's the best sign. And I've been giving this feedback for the last many days that the broader markets are participating well. There is participation back, and that's showing up in the Nifty, in the mid-cap index as well. Again, in today's trade, it's up 1.5% and has been the best performing index, so to speak. The big sector support has come in the financials. For the last couple of days, well, the flows were negative, but still the financial stocks were doing good. And today it looks like there's a bit of reversal in flows as well. So that's the reason why you're seeing a big move in the financial names. And I guess it's also to do with the fact that the Adani Group stocks are doing good. They've bounced back from the recent low, so there is a bit of rub-off on the financial names as well. Within the financials today, the PSU banks and the small private banks stand out in terms of outperformance. So that's where the big outperformance is. The other sector which has done well today is the metal names. Like after a recent underperformance, you've seen a bit of an uptick in those metal names as well today. But clearly the trend is there is an uptrend market today, and that's backed by some FI buying as well. That's the overall feedback.
Okay, all right, Nimesh. So good to see, right? A green day after a while. But what about individual stocks? What are you picking up?
So, Nigel, in terms of individual names, the first stock is L&T Finance. Like sticking with the theme of financials, this is one stock which is buzzing in trade, good volumes as well. And I believe some bit of HN action is back in this particular stock. So that's the reason why that stock is buzzing in trade. The second one is BHEL. That stock is buzzing in trade today. In fact, post numbers, the stock sharply got corrected. Now you're seeing a bit of a rebound. And there is a big buzz or an anticipation of a large order coming for BHEL very soon. So that's something to track as far as BHEL is concerned. And the last stock is Max Healthcare. That stock is up in green today and actually has been consolidating. But for the last couple of days, the feedback is that one leading FI is an active seller in Max Health. So that is something to track. The delivery volumes are quite high, and there is a large investor who is looking to sell out in this up move.
Thanks, Nimesh. Yeah, I noticed BHEL as well. Now, the chatter explains it because today's move on BHEL is on pretty decent volumes. It is one of the top volume stocks moving around for the day, and that's a 4.5% up move as well. We'll take a quick break on that note. On the other side, we will get you some final trading calls for the day, and we'll have Mitesh join in back for that.
Welcome back. We're at 3:30 p.m. And we're 15 minutes to go, and we're still in the green. So that's good news. The mid-cap index as well is trending high, and the Nifty Bank as well is holding. So we like to say that this has been a good session. A few stocks that have moved up. Indus Towers has moved to the high point of the day, and Federal Bank as well. Now that's bucking the trend. It's up close to around 4.5% as we speak. TVS Motors, the numbers come up for you on the screen. Exports have taken a hard knock. In fact, they're down by close to around 50%, I think, on a year-on-year basis. So we should get that number up for you on the screen. We'll get that in just a bit. The split between exports as well as domestic, that'll be up shortly. Bajaj Auto earlier this morning said that yes, exports continue to remain under pressure, but there are signs maybe the next few months that things will start recovering out there. In the meanwhile, let's get in Mitesh back. Mitesh, what are the calls you have for us today?
So, Nigel, India Cement is something which I would want to recommend as a BTST. That's BTST with a stop below 190 for targets of 197, 198. And LIC Housing Finance is the other one. That's the BTST as well. Keep a stop below levels of 353 half year and a target of 362.
Okay, got that, Mitesh. Thank you very much. For what it's worth, the market's practically at the day's high. It actually is, Prashant. I mean, I know you're the one who's tempering our enthusiasm, and for very good reason. But the manner in which the day's move has happened, the fact that we're not sort of, slipping off and there's no indecisiveness, so to speak. Perhaps, I mean, the bulls might want to take some heart from that.
No, they should. And the great thing will be if overnight in the US, the dollar cools off, yields are lower, some data which comes. I mean, for example, yesterday we had the consumer confidence numbers out of the US, which does show that 6 months out, expectations are that there will be no income growth, etc. That's so, I mean, you need, there has been too many 5 or 6 data points over the last 1 month or so, which have been too strong, right? So you need something to turn that around. I was pointing out this morning how the US 10-year, if you look at it, that's been hesitating for the last 3-4 days at about
just below 4%.
So it's possible that, because it's so overbought, I mean, we see a bit of a pullback, a cool off, and that can kind of extend the rally here a little bit more. But I take what Ajay said earlier, that, it looks like this has got a little bit more to go. I mean, yields on the dollar, etc. It's not going to settle down immediately. That is not how these things play out. So it's a long drawn-out process.
Prashant, the bulls are cheering for you. They're saying that hopefully we get this overnight handover that is positive. But irrespective of that, I think earlier this morning when we woke up, the dollar index was 105.
Just under 100,
Just under 104.93 or 94 odd when I woke up. That's one of the first things that I look at when I'm making my notes. And it's come down to around 104.5 odd. So that's been a good...
So it's come off already.
Yeah, it's come off. I mean, let's pull up the dollar index. So that's a positive as well from emerging market perspective. Some cooling off on the dollar index. That's a meaningful...
There's a 0.5% is a pretty meaningful move on the dollar index. And I think... so I think, I mean, this is the kind of stuff that you want. You want dollar lower. You want yields cooling off a little bit more. Take out 4 out of the equation for now. Equity markets in the US, the S&P, for example, it closed just under the 50-day moving average. That it comes up above it. So more positive, reassuring kind of handoff, and maybe this extends for a little while more. Survey.
No, but folks, I'm just saying there's another piece of data that I looked at which came out of China, morning hour time, and that was a super hot PMI manufacturing number. It's the best we've seen in a decade. It just got me thinking, even when we didn't have a global problem when the year started, the money was anyway moving to China. We've seen what the Hong Kong market has done today. Technology, consumer stocks, restaurants, all kinds of stocks are flying in China. I'm just wondering if that shift will keep continuing, or whether people will say, okay, fine, we have some valuation comfort in this market at 18 times forward earnings. Maybe at least incrementally allot some money to India as well.
I mean, it looks like it. I'll tell you, I think Bank of America at one point put out a research. I mean, they did some work going back 20 years. What they found is that tactically this shift does happen when when funds go overweight one market, too overweight or too underweight one market. Tactically, money moves from one to the other. But generally speaking, when emerging markets get money, all markets do well. Right? When emerging markets as a category, because India gets 95% of its money through global emerging market funds. So when that category gets money, everyone gets money according to their weightage. 30% for China, 14, 15, 16%, or whatever the weight is for India, the last number. So, the numbers, the PMI numbers were super strong out of China, which does underscore that consumer demand is strong. It's positive for metals to begin with. Well, on the sidelines of the NASSCOM Technology Conference, and there's a leadership forum, we spoke with Krishnan Ramanujam, President of Enterprise Growth Group at TCS, and he's also the chairman of NASSCOM. He addressed that the CXO survey has shown cautiousness among clients. Listen in.
The survey broadly points to caution in the wind, right? And that's understandable. I think we've all known it for a while, that the war in Ukraine, the recessionary headwinds that are caused by the combination of the war and other geopolitical considerations that are going on, as well as the effect of inflation, the rate, US dollar strengthening, and so on and so forth. There is a lot of uncertainty in the world. Most organizations globally are having a very hard time in terms of planning and the horizon at which they have to plan. And that uncertainty is the broad keyword. Similarly, when the year began, at least in India, but more broadly globally as well, attrition was a huge issue. So the way in which it has panned out is that not only is no longer a year of mass resignation, it's threatening to lead into a year of mass layoffs.
And you can catch all of our conversations from the NASSCOM Tech Forum on a special show, Tech at Work. That's coming up at 6 p.m. on CNBC-TV18. Mayuresh Joshi joins us to finish off things. A day which is, which really belongs to the bulls. Let's just put it that way. Mayuresh, good afternoon. Great to have you on the show. Your thoughts on the market and more specifically on one stock. I wanted to get your take on Axis Bank. It is one of the best performers on the Nifty. We know the City deal is done. Your thoughts?
Afternoon, Surbi. So on the markets, as per the O'Neill lens, we are more on Prashant's side at this point of time. A little bit of caution probably being laid out. I'll give you 2-3 reasons why. One, I think if you probably look at some of the emerging spaces which were in the fine uptrend. I'm not talking about the Hang Seng market has done phenomenally well today. But specifically in terms of a market like a Kospi, the Korean index was in a fine uptrend and started clutch of distribution days. And suddenly that market is under pressure. Surprisingly, I think the European markets would have held up very, very well. You look at the DAX, you look at the stocks 500. I just put a tweet a couple of days back that it's holding out very, very strongly. And even in the US context, our global strategy research is probably suggesting that the S&P earnings probably bottom out at least a quarter or two before the S&P actually bottoms out. So what I'm trying to say is that maybe in the next couple of quarters, once we get out of this volatility and all the macro data points, with the worst probably being behind us, you might see a bottoming out process starting even for the US markets. Having said that, I think the Indian markets should hold on to those levels of 17,250 that we've probably seen. Holding on to those levels for this week becomes extremely critical, and then probably getting a follow-through day. A few spaces which have had leadership positions in the last few quarters, capital, goods, stroke infra, still holding out very, very well in these markets. A few of the leadership sectors have probably turned a little bit sideways, banking included, which takes me to your question on Axis Bank itself. The relative strength for Axis Bank, the EPS strength is relatively strong. The RS strength probably coming off. But with the City deal coming through, 3 million customers expected, 2.5 million in terms of card holders as well. They're getting top-notch processes probably in place in terms of customer service, customer orientation as well. And on their own numbers as well, what you're probably seeing in terms of asset quality pressures, largely getting behind them at this juncture. NIMs expected to stabilize. Deposit rates are going up for the system as a whole. And therefore, I think the stability of NIMs for the sector is a given for the next few quarters. But loan growth, capital adequacy, provisioning probably remains very strong and expected to improve going forward. So I think the price strength probably lays off a tad bit for Axis Bank. So I think wait and watch for Axis Bank at this point of time. But largely, I think banking should start recovering in the next quarter or two, in my opinion, as far as the Indian context is.
Okay, banking recovery is what you're bracing for. Thanks a lot for that, Mayuresh. We'll try to squeeze in a couple of more questions for you. But before we slip into that mandatory break, just pull up the intraday charts of India Bulls Real Estate. There's that NCLT hearing that was pending, and it was, I think, scheduled for today. The street is optimistic that, in fact, that India Bulls as well as Embassy deal will finally get the green signal. For the time being, the stock has moved to the high point of the day. Big volumes out there. A few days ago, we had management change, and it's giving Embassy more control of the entity. So just keep an eye out on that. We'll try to get you the latest if, in fact, that NCLT green signal does come through. Slip into a short break. Come back. When you come back, final few minutes of markets, we'll close it down.
Okay, with 3 minutes to close, I think we can safely say that we will have a positive daily close. 8 days of selling, worth 900 points on the Nifty, 900 points. And, after that, we get a positive, strong close. So this is something which is certainly interesting. Mayuresh, any thoughts on names like TCS, etc.? I mean, actually, I was looking at the TCS chart also. There is a very steep downward sloping angle. There's a trend line which TCS is exactly at. Maybe it either that fails to take that out. There's about 33.87 or so. If it takes it out, perhaps there is 5-6% more in terms of an upside. Any thoughts on names like TCS and the tech pack generally?
It would move sideways, Prashant, at this point of time. Largely, I think in terms of the numbers itself, the gestation in terms of how earnings will probably play out. Specifically in the next few quarters, assuming a slowdown looming, a forced induced slowdown in the US market and key sectors thereof would probably weigh on in terms of how execution of numbers will happen. Secondly, I think order wins should start tapering down a tad bit. And therefore, I think the overall valuation stack up for the ID pack, we are probably equal weight at this point of time. What we really like at this juncture, Prashant, something from a momentum perspective, is these gas distribution companies. Naturally, gas prices have come off quite significantly, some bounce back expected, but volume growth expected to come back very, very sharply if they are able to sustain at these lower levels. Input costs come off, which means in the next revision, prices come off significantly, which props up volumes even higher. So I think some stocks like IGL definitely stay on a rolling lens.
Okay, all right, Mayuresh, we'll have to leave it on that note for today. Thank you very much for joining in and taking us through the close of the day. And the close has been on a fairly solid note, 150 points up on the Nifty. The sensex also clocks a gain of about 0.8%. The mid-cap market has performed actually far better than the frontliners. Banks have led, metals have been shining, and you've got some gains in IT as well. Consumption actually was the one part of the market which was a little lackluster. Look at stocks like Britannia, etc., Lever, they did not perform. But otherwise, you had some important pillars coming out in support for the bulls. Auto sales as well. I mean, we didn't have any major disappointment or huge howler. TVS Motors, you can argue, stocks closing negative. But other than that, Bajaj, for instance, up about 2.5%. So if we talk about the Nifty tally to start things off, Hindalco is right up there, 3.5%. It has company in the form of State Bank of India, 2.5%. IndusInd Bank, Axis Bank, extremely strong day for a couple of these banking stocks. Actually, the real big boys, ICICI Bank, they've been relatively muted. Just about a 2 rupee gain on an ICICI Bank, and HDFC Bank is actually ending negative. Then, of course, your tech titans, TCS, HCL Tech, are stocks that have done quite well.
All right. Well, so we just took a few more stocks. Rupa, that stock, what a run it had in today's trading session. You had a couple of other notable names as well. Adani Enterprises, I'll tell you what a volatile stock. Yesterday it had a good run. Today as well, it was up and about. But after a while, let's just get the Nifty Bank and the mid-cap index. We haven't seen this in a while. So I think the screen is green, which hasn't happened. So the bulls will live to fight another day. But for the time being, they'll be pleased with today's performance.
They'll sleep happy.
Unless we get some really strong data coming out from the United States.
And that bond deal plays spoil sport here.
Don't look at markets, guys, in the evening. Just come back in the morning and do that. For now, I mean, it's a decent, strong close. 17,457 is where we leave off, above the 200-day moving average, and it's a pretty good close all across. So that's what we have. We've been, of course, highlighting all of the. Actually, in the Nifty, the three pockets which did very well is banks. So SBI, IndusInd, and those names. You had the tech names at TCS, HCL Tech Mahindra, and then there was the resources pack: Tata Steel, Coal India, names like ONGC. So these are the three pockets for the Nifty which did the trick, really, on the upside in that sense. So 150 points higher, 17,457. Well, it's a wrap on this edition of Closing Bell, but don't go anywhere. Our special offering, Indianomics, comes up right next.